Hey there, YouTube family. Say hi in the comment section and let me know if you got some of that Tesla money today. Yesterday, I told you guys that I was buying Tesla options first thing Monday morning, and I told you that I wanted to get 6% out of it. We hit that, and we are working on 8% right now. I got into November 4th, $225 strike price calls. And right now I'm 78% up on the day. I've already heard from some of you in the comment section that you got into similar calls and are sitting up similarly. Very happy for everybody that partook in this trade. My original target was $217 by earnings. Well, we hit that right away. Then my second target was $220, which we also hit. And then my third target was $223. That would bring us right up to touching the 100-day moving average. You know that I'm a technical trader. When I make trades and make decisions, I'm looking at price action in the charts and how things are setting up. Where is my resistance going to be? Where is my support going to be? There's a lot of enthusiasm when stocks begin to move up, but there's always a ceiling. We have to remember that we're still in a bear market. And so at this moment in time, we've achieved 2 of my price targets, and considering whether or not this will slow down at 223. So the big question is, where is Tesla going to go from here? A lot of you guys that didn't get into it when I called it out yesterday, first thing this morning, are going to ask me in the comments section, should I buy it right now? Well, we're going to try to tackle that. Is this the beginning of the move, or is this just going to putter out? And is it going to be a fake out? Hey, if you're investing in yourself and you're trying to learn how to be a better trader, then don't miss out on the dialogue and the conversations and the calls that are being made on this channel. You do that by hitting the subscribe and you hit the bell. You join the family of traders. I'm not the only one. We've got some great traders that are operating in our comment section and often answer questions for some of you that I don't get to fast enough. I just come along and say, yep, that guy was 100% right. Join the daily dialogue by hitting that subscribe and that notification bell. I'm going to start with this video clip conversation, which I think does a great job of sort of giving us an overview of 2 opposing views, a bull view and a bear view. There's a great dialogue here, and then I'm going to break it down and tell you what I heard at the end and give you my opinion of what was said.
Joining us now is the Tesla bull, Garrett Nelson with CFRA. He's got a strong buy rating, a $400 price target on this stock. GLJ Research's Gordon Johnson is way more bearish on the stock. He's got a sell rating with a $73 price target, the lowest on the street. You know, it's interesting, guys, because it's rare that you have a bull-bear debate and you've got people so far away from the actual price of the stock. You're really on opposite ends of the spectrum. Garrett, I'm going to start off with you in terms of that very bullish price target that you have. Is that a 12-month price target? And what are the catalysts there, especially if we see, you know, a recession, which many more people are calling for? Is $400 realistic?
Yeah, thanks for having me. Let's not forget that just 3 weeks ago, the stock was above $300. So while the stock has come in, sold off sharply over the last few weeks, that we think $400 is still achievable over the next 12 months. Simply put, we view Tesla as one of the market's best earnings growth stories over the intermediate term. If you look, Tesla earned adjusted earnings of $2.26 last year. We see their earnings growing to about $7 by 2024. So, you know, at a time when inflation is really weighing on earnings growth, you know, broadly across the entire market, and consumers are pulling back on spending, there's really no other company out there that has this type of earnings growth trajectory. Even if you assume the analysts are wrong and you haircut those estimates by, you know, say 20 to 30%, it's very impressive earnings growth. And it's being driven by increasing production and sales at the 2 new factories that they just started up in Texas and in Berlin.
Gordon, you've been a long time bear on the stock. $73 is a long ways away. Is there a particular catalyst at this point that you see finally coming home to roost? Because the argument had been, you know, in the past, and I'm going way back, maybe accounting issues, the vehicle tax credits are going to expire, you know, all these different things that have sort of come to pass, and the stock hasn't hit, you know, that very low price target.
Yeah, Melissa, thanks for having me. Good to see you. Long time no see. So Tesla is effectively valued as a high-growth company. And the problem is they're no longer growing. The issue is very simple. Tesla in Q3, their sales were 343, but if you look at Q3 and Q2 versus Q4 and Q1, their sales were actually down. So they're no longer growing. Why is that a problem? The answer is simple. Tesla is valued at more than the next 10 largest automakers combined. They're valued at more than the next 10 largest automakers combined, despite selling just 2% of the cars those automakers sell. And when you look at Tesla's lead times, you can now get a Tesla car effectively in a week and for all of their variants across China, which means their backlog is gone. They're no longer growing there. Their sales in Q3 in Europe were actually down versus Q1. And there's effectively no more backlog in Europe. You can get a car immediately there. And in the US, the lead times for the Model 3 are roughly a week, and the Model Y are roughly 3 weeks. So this is a company that's no longer growing. And you're looking at sales growth that is now declining. And I think the issue is, unless Tesla cuts prices significantly, we think Q4 growth is going to be down versus Q3. So you're looking at a company that's either going to see no growth or margin debilitating price cuts to move units. And I don't think you want to pay 100 times earnings for that company when the auto industry trades at 5 times. And when people say Tesla is more than an auto company, they're not. 95% of revenues from selling cars, the other 5% from an energy division. But if you want to give them that, you have problems. Their energy division has single-digit gross margins, which means it perpetually loses money on the operating line. So I'd like to know how Garrett would value a company that loses money in their other division outside of cars.
All right, I thought that was a great video. And I specifically liked the question that the moderator asked right at the start. How will the recession impact Tesla's pricing? I don't know that either of these guys necessarily answered that directly, but let's break down their arguments. We're going to start with the bullish argument. I'm going to share with you what I heard, and then we're going to go to the bearish argument. Starting off, the first thing he said on the bullish argument was Tesla was just at $300. Now, I thought that he did a terrible job articulating why that was relevant. It almost implied that because we had just been at $300, we could somehow easily get back. But what I think he was trying to say is that Tesla has the liquidity as well as the market's interest, and that there is a focus on it, and there's a lot of money that can be put behind Tesla to move it back up $100 easily. I think that's what he was trying to say. He went on to say that Tesla is still the best growth story around. Now, that to me sounded like he was sort of hyping it up. I want to make a very strong point here on what he said. Okay, he said it's still the best growth story around. And this is where we get into trouble, because I've shared with you guys before the cycle of stocks. There's an accumulation phase, which is often done by the smart money when the stock is super cheap. And then there is a markup phase that causes the stock price to just soar in value. That's often when the retail audience gets involved. And then there is a long trending distribution phase where the smart money unwinds their profitable position to someone else who will buy it. That's sort of referred to as the greater fool theory, which means that you're selling something to the next guy who believes that it's going to continue to go up from there. So I think what he was saying is that they're still the best growth story. And so we have to examine, is the growth story behind Tesla truly as good as it was when it was in the accumulation phase pre-markup? That's what we're going to have to examine in this video. Number 3, talked about the fact that positive earnings are going to continue. Now, I want to agree with him on this point that earnings absolutely matter. And what he is saying is that they're going to continue to have good earnings moving forward. But here's the question, and anybody who really understands how this works understands this idea. It's not a matter of meeting analysts' estimates. What people are going to be looking for is that exponential growth in earnings, and it cannot be less than the previous years. If in previous years the exponential growth, let's say, was 60% quarter over quarter, even if it has growth of 40% from one quarter now till the next quarter, the fact is that it doesn't have that 60%. People want to see that 60% move to 80%, the 80% move to 100%. So even though he's right that earnings do matter, the exponential growth of the earnings also matters. Now, his final point that I caught was that Tesla was unique in their earnings growth projection, that they were a one-of-a-kind tech company as far as how they were positioned in the market, that nobody was going to be growing quite like they were. Now, there's a little bit of meat to this part of his argument, because at the end of the day, one of the things that people will look at when it comes to placing money and investment is sort of best in class. And so his argument was that moving forward, even though Tesla might be in a tough spot, they're actually going to be best of class in a future negative or recessionary environment that we're going to see better quarter over quarter earnings from them than we're going to see from other tech companies and other big manufacturers. Ultimately, one of his best bullish points was Tesla's uniqueness as a one-of-a-kind asset for people to consider investing into. Now the bearish argument. Well, he started off saying that Tesla has been valued as a growth company, but that the growth model doesn't fit for Tesla anymore. He said that sales are down, not up, in regards to the momentum. And of course, I've heard this argument before. It's becoming more and more valid over time. He reminded everybody that Tesla was valued in the price of its stock greater than the next 10 automakers combined, which meant that Tesla was significantly more valuable than all the other automakers in the world. But he pointed out that Tesla only had 2% of the sales of that group of automakers. That's been a long-standing bearish view of Tesla, but eventually that view may come home to roost. He also said that sales are not backlogged as they had been previously. That's one of the reasons why the stock ran up in price, is because there was these massive backlogs. People were positioning themselves to buy a car way out in the future. He's saying right now you can get a Tesla in 1 week. The current production is up to speed, and that's a big point, because he's basically saying they're all caught up. So the idea of unprecedented growth, waiting lines, it's just not there. They could be hitting saturation. Now, what I dislike about that argument in particular is kind of the fact that these guys have they're running their business so well that that's a bearish argument, because they're able to output cars. And that had been a focus of priority in the times past. Everybody wanted them to sell cars, so they geared up to do it. And now they're saying, hey, we want to see your geared up position get backlogged. So his bottom line was that the growth isn't there, and that what that's going to mean is that for them to push all these cars that they've become better at making, they're going to end up having to cut the price of their vehicles, that it's going to become a more competitive environment. And I want to say that that could happen. And I would tell you that if they come out in any way and cut the price of their vehicles, this stock is going to dump. That would be perceived very, very bearishly by the market. Many of you guys own an iPhone. I own an iPhone, and all that they've done in the last couple of years is come out with pricing strategies. But the price of the iPhone has continued to climb. The way in which they sell it to you, maybe it's payments, maybe it's a program of some sort, that's been changed. But the overall price has increased. Tesla would put the nail in the coffin if they were in a position where to move vehicles, they had to cut the price of those vehicles. So we'll keep an eye out for that. At the end of the day, the bearish narrative is that Tesla is simply not worth 100 times earnings, that position has to be reserved for companies that are right at the beginning of explosion and growth, and that Tesla is not at that beginning place of future explosion, that they're getting a bit more mature, and that their valuation may be off. He also said that the argument that they're more than a car company, they're a tech company. Well, he said, even though in theory that's been very appealing, at the end of the day, 95% of their revenue has come just from their cars, and the other 5% devoted to this tech company isn't actually in the profit yet. I have to admit that these arguments have become more and more compelling regarding Tesla in this environment. Well, I might get some heat from this, which is okay. Let me know in the comment section what you guys think. But at this moment, I still can't get out of the bearish camp on Tesla. But that doesn't mean I clearly came into Monday morning with a big buy on it and telling all of you guys to buy. So if I'm so bearish, then why am I calling out a buy? Because the same reason why I talked to you guys about what's going on in the S&P 500 as well as this recession. We may be going down, but we're not going to fall down the stairs. We're going to go down one level at a time. And there's going to be opportunities just like this that are going to have a rip your face off rally to the upside. That's what I have devoted years to developing a skill to identify, to see where those potential reversals will be. That's why I brought the Tesla to you guys today. Now, I want to mention that I actually called the bearish narrative for Tesla back in April. I called it on Larry's channel when we were doing Technical Tuesdays with Josh, right? And I told everybody then that Tesla was in the distribution phase. And again, the distribution phase is that unwinding of a stock from the institutional hands to the retail hands. It's often identified by much higher price swings, which is what we saw today. Big moves, not incremental moves. So I still think that that's happening. I said at the beginning of this month that I had a game plan for trading big tech earnings through the course of this month. We've started off with Tesla. So far, it's been a great call. I'm going to continue to look at the big techs. We're going to look at playing the earnings on these through the rest of this month. So don't miss that. So I'm going to say it one last time. If you don't want to miss that, subscribe and get the notification bell and watch those whole videos so we can get more connected. If you guys want more connection, then you know that I'm on the MooMoo app. I'm there in the comments as well. To get that, you click the link in the description of the video, you open up an account, and they're offering 15 free stocks. But if you put in just a minimum of $100, then you actually get 6 chances at stock valued at $2,000 each. You can find me there under the Discover tab by searching Stocks with Josh and join our conversation there as well. I'll leave it right there. We had a win today. Peace and blessings, my fam. Take care.